Something remarkable is happening with Microsoft. The company is dominating the artificial intelligence revolution, from cloud computing to AI-powered software. Microsoft seems to be everywhere, but some investors are starting to ask a critical question. Is Microsoft still a safe long-term investment, or has the market already priced in too much optimisms? To answer that, we need to look beyond the headlines and dive into the numbers that institutions actually watch. To understand why Microsoft is attracting so much investors' attention, we need to look at the catalyst behind this growth: artificial intelligence. Microsoft has positioned itself at the center of the AI ecosystem through its partnership with OpenAI and the integration of AI tools like Copilot across its products. The company is transforming the way businesses use software. From Word and Excel to Teams and Azure, AI is now embedded across the entire Microsoft platform. And that shift is creating a powerful growth engine. But strong narrative alone are never enough for serious investors. So let's step away from the story for a moment and look at the actual financial data. Microsoft Cloud and AI Strength drive second quarter results by Redmond Walsh, January 28, 2026. The revenue was 81 billion. The operating income was 38 billion. The net income GAAP basis was 38 billion. This means something. Azure revenue growth remains strong. The operating margins are healthy, and the company is investing heavily in research and development to accelerate its AI strategy, because many investors will actually ask the question, why Microsoft is spending so much billions to expand its AI infrastructure. We can also see since the beginning of 2024 the evolution of the cloud business drive by Microsoft from 56 billion to 81 billion today. However, there's another side of the equation, because these metrics show a company that is only growing, but doing so with impressive efficiency. But when a company grows this fast, the market often prices those expectations long before they happen. So, where exactly is all this growth coming from? The answer lies primarily in cloud infrastructure, because Microsoft Azure platform has become one of the core engines powering artificial intelligence development around the world. So companies building AI applications need massive computing power, and cloud platforms like Azure provide that infrastructure. This means that every time a business adopts AI, there's a strong chance Microsoft Cloud services are involved somewhere in the process. And that dynamic alone is helping fuel one of the biggest technology expansion of the decade. Now, to understand the growth story, let's look at how the market has responded. Well, Microsoft stocks has delivered impressive performance over the past few years. The chart shows a strong and consistent upward trend driven largely by investors' optimisms around the AI boom. But something else is worth noticing, because recently the price came back to a major level here and is trying to bounce back. The reason is simple. Following the fundamentals and the price movement, it's easy to predict this kind of movement. The price hitting the 200 moving average and react is not something unusual concerning Microsoft, because we already see this movement happening once in the history, and the result breaking the previous all-time high. How many times? You will say 2 times if you consider this one here. So the price coming to this level is telling us one thing. Even though right now Microsoft is struggling based on what we see on the charts, we are still on a beautiful uptrend. Right now, with the investment on AI, with a lot of capex and other catalysts that I mentioned earlier, the price might just continue to go higher. Big banks, big companies are actually pricing Microsoft very higher. It means one thing. In the 5 and 10 years to come, Microsoft will reach better numbers. But of course, no technology leadership lasts forever without competition. This is the fact. While Microsoft currently holds a strong position in enterprise AI, other technology giants are investing aggressively in the same space. I'm talking about Google, Amazon, others. Because Google continues integrating AI across its search engine and cloud services, while Amazon expanding AI capability inside others, the largest cloud platform in the world. The race to dominate artificial intelligence is only just beginning. This leads us to the question investors are currently debating with. On one side of the equation, the bullish case for Microsoft is extremely compelling. AI adoption is accelerating, cloud computing continues to expand globally, and Microsoft sits right at the center of both trends. But on the other side, some risks remain. Valuations are evaluated. Competition is intensifying and technology cycles can shift quickly. This balance between opportunity and risk is exactly what makes the stocks so interesting right now. So, what might the future hold? Over the next several years, the scale of AI adoption could grow dramatically. If it happens, Microsoft ecosystems spanning cloud, productivity software, and enterprise services could become even more powerful. But investors may keep one important question in mind. How much of this future growth is already reflected in today's stock price? Microsoft is one of the most influential technology companies in the world, without a doubt, and a central player in the artificial intelligence revolution. But in financial markets, even the strongest company must continue delivering growth to justify their valuation. The next few years will reveal whether Microsoft can keep exceeding expectations or whether the market has already priced in too much optimism. If you like this kind of content analysis, don't forget to like, comment, and subscribe. It actually helps the channel to grow. Thank you for watching. I'm waiting for your comments and have a nice day.